And we're going to strip this down into our classic perspective where we go into 7 o'clock in the morning. Okay, so look at 7 o'clock in the morning, go back into the overnight session, relative equal highs. Why is this important? Why is that likely to be a draw? Okay, we'll look at that in a moment. But the market does, in fact, trade higher, runs up with a juice swing, gives up the goes lower, market maker sell model down into the 15-minute buy side balance, sell side efficiency. And why did I highlight this? Why didn't it go to the low or make a run below that low here? Because we're inside of a range, a real sloppy range, and it can keep these ranges intact. So I kind of like to use the inefficiencies, and it worked out kind of well today because of the choppy range-bound conditions. So for your notes, just keep that in your mind that when we're range-bound, if there's inefficiencies, the market will more likely use those and keep price inside the existing range and not trade beyond it. If it does trade beyond it, then it's usually a shift from a high resistance to low resistance liquidity runs. Not all the time, but it can indicate that. So since we're in high resistance liquidity run conditions, look for the range to maintain and trade to the inefficiencies just below the old highs or just above the old lows, as we saw here. Okay. So we're going to take a look at all this here and zoomed in, moved over here, 7 o'clock in the morning, Eastern time. We're looking at electronic trading hours, 1 minute contract, a 1 minute time frame on the March delivery contract. It's not continuous now. So the market rallies up, breaks lower, and trades below the original low here or consolidation down into that 15-minute buy side and sell side efficiency. Beautiful delivery here, and it vaults higher to challenge the old highs in here. So we had a discount wick, measure that, consequent encroachment, it hits that. This area in here, I had this noted, and I was actually talking about this, and obviously you're not going to be in the conversation, but as I was working with my son, I was indicating how that would be a eventual inversion fair value gap. So without drawing the rectangles on there, moving over here, you can see how it used that with the bodies and then vaulted higher. And again, that's electronic trading hours. So now we're going to go into regular trading hours. And this was the previous regular trading hours settlement price, that closing price right here. And we're going to highlight that. Okay, so that's going to be regular trading hours, opening range gap high. Why? Because it opened down here at 9:30, regular trading hours. So that gap here, that is the opening range gap, or regular trading hours, RTH, opening range gap. Once we have this, okay, and it opens lower than where it settled previous day, this is a regular trading hours opening range gap low because it's lower than the previous settlement closing price on the previous day. So this is not indicating any of the electronic trading that took place between these two respective times. So now we have that. We can draw our fib from here down to here. I've shared my recent videos where you can see the settings where it has the eighths on it. And you can see that here. So it's quadrants all stripped down. The market trades above it. Look at the bodies respecting the previous settlement. Wicks are allowed to do damage, and then it gives up the ghost and goes lower. You'll see what this rectangle is when we go down to the 15-second time frame. It's there just because it's a nuisance because I didn't remove it. And so I'm in there trying to drive you nuts. What have you got this highlighted for? You'll get to it. Just relax. The market trades lower. But this was the first presented fair value gap of the morning here. Okay, it's this buy side and balance sell side efficiency, which turns into an inversion fair value gap. So it hits lower quadrant, low, and then moves lower. So there's your first presented fair value gap, and it's under the premise of a inversion. Okay, done work up in here and in here, and then dropping down just below that low was enough today. But we're going to take that, scrub on over here, and this guy's got his eye right over here. Look, he's watching you. Here's that run up of, and now on the chart that I shared this morning, when Cameron was working with his account, I had forced him to use the 24,800 even big figure. So the only thing that was happening was it was being calibrated 2 more ticks higher because it's a big figured level. So you can see how it was sweeping here, 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 and finally gave up the ghost, went lower. Here's your breakaway Civi, trades up into it there. Or you want to call it the model 2022, buy side, shift and market structure, model 2022. Wow, this works on a 15-second chart. Yep. And it moves lower. And then you have smart money reversal, low risk short, first stage distribution, second stage redistribution. There's your unicorn price run, bang, takes off and trades down to that random 15-minute buy side balance, sell side efficiency. Then comes back up for a return back into that 1 minute discount wick. Consequent encouragement uses that and trades back down and revisits that 15-minute buy side balance, sell side efficiency. These gradient levels, look at the PM session and look at the Asian session, how it's utilizing these levels here. And you'll find that pretty interesting, I'm sure.